Alright, are we recording? I think we're recording. What's up, everyone? Hope you all have had and have a great weekend. We're back at it with episode 2 of Japanese Candlestick for Beginners. If you haven't seen episode 1, I recommend you to watch episode 1 because this is a build up from episode 1. And I'm gonna put in the description so you can find it easy, or you can just go into my channel and it will be in the playlist, for example. Episode 1 was about candles and different type of patterns, and this is gonna be based on how to implement those you have learned into the market, right? And yeah, so we're gonna talk about the market structure. All right. We have trend structure, the uptrend, downtrend. We have range structure. We have support and resistance structure, impulsive and corrective. Some call it for pullback structure. And we're gonna go through one by one and try to make it as easy as possible through this video. So the market trend, how can we identify the direction of the trend? Some people like to look at the moving average. And for example, exponential 8 and 14, how they interact with each other. Some look at indicators that are made for trend, and others like me prefer to watch directly at the price action. For example, in the uptrend, buyers are in control of the market, right? And by identifying this structure, you know what decision to make. You know, okay, I shall look for buy opportunities. And as you can see here on the chart, it made a higher high, and I have and it's written LW for left wing or something. It meant to be higher low. So in this case, you will buy at this point where it's gonna be higher low, right? And not higher high, because then you're going to a drawdown before it goes up. If it goes up, you never know, right? And then we have the downtrend. The downtrend is everything the opposite of the uptrend. It makes a lower low, lower high, so the sellers are in control, and we are looking for sell opportunities at the higher lows, right? Then we have the range structure. In the range structure, price bounce between a specific high and low price, right? As you can see here, this is the high, this is the low, and it just bounces between. And the high price act like a strong resistance it can go through. It had tried 2 times and failed. Same with the support, 3 times failed. So when it ranges, it just tells us that it's balanced in the market. And a golden rule is to not trade inside the range, but either from the top or from the bottom, right? And that's because of the risk-reward ratio. And yeah, you can use, for example, piercing pattern and different type of patterns from episode 1 into the range, for example, which is pretty easy to make money on. Then we have the support and resistance structure. This is like the one of the first things you have to learn as a action trader. And it's, for example, in the range, you know for a fact that when it goes to the resistance, it went back down like 2 times, and from support 3 times back up, as you can see here. So it's a high probability that it actually will reverse, right? Because in the market, we don't know everything 100% for sure. We only work based on probability, right? And it's our job to find the best opportunities. So how do you identify those support and resistance levels? There are a few criteria we require. It doesn't have to be all of them, but the more the better, right? So we can start off with the swing highs and swing lows, meaning the highest and the lowest point it has reached in a recent time. For example, here, it went all the way up, got rejected, went back to the middle, went all the way back up, and got rejected again. Then went all the way back down, and you can see it has been down there before, so it's going in a range. However, it got rejected several times up here, down there, so you know, okay, this is the lowest. I can buy at this point, and I can sell at this point, and buy here, for example. till it breaks finally. Then we have obvious price rejection pointers. For example, it's one here, one there, one there, one there, and this is a daily chart, for example. So this is a good amount of time. You have to be patient till it comes to your entry point, right? Don't feel like you're missing out here and there, because you're gonna get paid in the end for your patience, right? So based on the rejection here, you know for a fact that this is a strong resistance, so you're probably sold here, at here, or at this point. That's still a good entry. Enjoy. Then we have a broken support that becomes resistance. For example, here it has gone in range, probably, and it finally broke through. The support is now resistance. Why is that? Because it broke through and it's going to go back up to retest it. Maybe it's a fake out, maybe it wants to continue back up, and as you can see, it got rejected. So now is the support the roof. So we went from second floor to the first floor, and then you look up and there is the once support roof. Yeah. All right, let's move on. The broken resistance is now support, so it's the same thing, just opposite. All right, it has tried to break through the resistance. It didn't, however it did in the end, and as you can see here, it retested the resistance, which is now support because it got rejected. So it goes up from there, and then it makes a new resistance up here, right? Then we have the impulsive and corrective structure. An impulsive move is a strong wave towards the trend, right? For example, here is if it's a uptrend, this is the impulsive move, this is the corrective move. All right, this is like the pullback, we call it. And the reason it actually takes place is because buyers are closing their positions at this point. They're happy with their higher high, so they close it, and then it forms a higher low, and then people entry again, and then it continues till the trend stops, right? Then we have one example we're gonna finish off with. As you can see in the bottom, I'm gonna fix some pen. It has gone through for a range probably and got rejected at this point. So this is a strong resistance based on this rejection. It went back down and started to go back up. All right. So we know already that around this area, if you can see that wick, this is a good entry place, and it's an inside pattern. Do you see that? So you could probably buy around this area, and this is the impulsive movement till the resistance. However, it broke through, right? That's the cool part. So it broke through, and then we have the corrective movement, right? And it got rejected because the resistance is now what? It's now a support, right? And then we have a new impulsive movement, and we have another corrective. Then we have an impulsive, then we have another corrective, right? However, what is also interesting is that this point, oh, that was ugly, sorry. This point is also a resistance, and it broke through. You see that? And something that is a resistance but it gets broken through is what? It's a support. As you can see here, it retested again, then it continued, and it's going to continue like that till it eventually stops going up or down. All right, I hope you guys learned something new today. If you did, I will appreciate if you could like the video. We got 3 likes on the last video. If you can smash 5 likes on this one, it will be amazing. And Make sure to subscribe to get notified when I upload next video. And yeah, have a good one. Take care. Peace.